Welcome to ABL Advisors video series featuring thought leaders from the commercial finance industry. I'm Mike Toglia, the publisher of ABL Advisor, and today my guest is Michael Jerbich, the president of B. Riley Real Estate. Thanks very much for being here today, Michael.
Hey, thanks for having me, Michael.
My pleasure. Today, what we're going to talk about is your view of what's going on in the commercial real estate market. But before we do that, is there a few things you'd like to just fill our audience in a little bit about B. Riley?
Sure. Listen, I'm not sure what you know about B. Riley, Michael, but we're a full spectrum financial services firm with a focus on public and private, distressed and healthy, and small to mid-cap companies. For us, it's a really exciting time to be here. Last week, Fortune magazine recognized us as the #2 fastest growing company in America. So we're excited about our growth and look forward to what the future holds for our clients, investors, and the firm.
Well, great. Congratulations on that. And thanks. So the commercial real estate market has experienced some significant challenges over the past 18 months or so, primarily related to COVID. I'm going to focus a little bit for our first question on brick and mortar retailers. What do you see happening for them in terms of occupancy rates for the brick and mortar retailers, let's say through the end of 2021 into 2022?
Yeah, I think the pandemic created kind of an environment of difficulties for brick and mortar retailers. Some of them flourished during that time, whether it's home improvement, nursery, recreational vehicles, and what have you. But the hangover associated with the pandemic is still there, I think. You have weaker retailers struggled, and that caused weaker shopping centers to struggle. But I think ultimately what you're going to see is a flight to strength, right? You're going to see, stronger retailers gobbling up weaker retailers. You're going to see the better centers absorbing the better tenants. And you're going to see a lot of the underperforming centers maybe go away to eliminate that shortage. And so I think you're going to ultimately see rents over time stabilize and maybe increase in the coming years. But at some point, the demise is going to slow.
Well, that would be good to see. And hopefully everything comes out the way you said. So, that continues to be a challenge sector in many ways, but things are going pretty well, it seems, at this point. I'm going to switch gears a little bit now and look at office space.
Sure.
So commercial office space has been a problem as well. And a lot of office space, quite frankly, is still empty to some degree. Do you believe the office space utilization rates are going to remain low in the coming year and even maybe beyond the coming years?
I think you're really going to see, and you and I talked about this a little earlier before we started this, you're going to see things regionally. You're going to see certain regions where there's, population migration over. You're going to see demand's going to follow the population. It's just logic. Short term, you're going to see, what you've been seeing, a lot of people working from home 2, 3, 4 days a week. Sometimes, many offices aren't even open right now and everyone's working from home. I think over time, that's going to change. I think ultimately people are going to realize that I personally think we're better served working and collaborating with the team internally. And I think in society, things regress back to the mean. So regionally, you're going to see some issues. There's a lot of flight from cities in urban areas, and you might see in Chicago or in Boston or something where there are difficulties in the office market. But overall, as a sector, I wouldn't be as concerned because I do think ultimately it might take a couple more years. We're going to regress back to the mean. And I think companies are going to realize, from my personal perspective, that you're more productive when people are working together than sitting on a couch at home and running errands for your spouse. And so I do think ultimately you're going to see a regress back to the mean, and you are going to see some regions struggle though, for sure. But overall, the sector, I think in a couple of years, you'll look back and we'll be back to where we were.
Well, that's interesting. So I always think about it from the lender's perspective. Meanwhile, the lender has money out to the borrower who is, owns the commercial real estate, the office space. Are there any thoughts that you have for lenders, how they can work to preserve the relationship with their borrower during the difficult time until maybe things do come back to some sense of normalcy?
Yeah, I think if I'm a lender, I'm concerned and focused on where my borrowers' offices are, right? Like if they're all in one urban area where there's a flight or something, I'd be more concerned. if I'm a lender that's lending to a REIT that's, you know, agnostic to geography, it's all over the country, I'm a little less concerned.
So geography is a big play there. And
Yeah, I think so.
That makes sense. So I'm going to now talk a little bit about what's happening in the world of real estate related to private equity and alternative investment firms. It seems that there's been quite a bit written lately that there's been a lot of investment from the PEs and the alternative investment firms. I'm curious from your perspective, what impact are they having on the market at this time, as compared to maybe the impact and are they impacting the banks and specialty finance companies in any way?
Yeah, I think we're seeing a lot of creative financing strategies lately, right? I know with our group here at B. Riley, you know, we're seeing a ton of activity in sale leaseback transactions. You know, sale leasebacks have really grown in popularity of late, where, you know, back in the day, I think there was a stigma that if you couldn't get alternative financing, you had to do a sale leaseback, whereas now I think companies are using it as a vehicle where they're able to get a lot more leverage, you know, before you get a 75% loan to value debt or something. Whereas now they're looking at a sale leaseback transaction with cap rates being so low that they're seeing it as an opportunity to utilize that money elsewhere. And we're seeing, you know, really compressed cap rates right now that are somewhat shocking, actually. But I think that right now you're just going to see a lot more creative financing vehicles out there. I think as interest rates rise, spreads between conventional debt and alternative transactions will narrow. But you know, I think you're going to continue to see more creative transactions in the future.
So do you believe that there's going to be some difficulty for the traditional lenders such as banks and some specialty finance companies competing in the marketplace because of the presence of PE? I know that you said there's compression out there, but it will become more difficult for them for a while?
I think for a while it's going to be. I mean, there's just so much money out there right now that it's been challenging. But ultimately, again, as I said earlier, I feel like we're going to regress back to the mean. And I think, you know, in a couple of years, once that subsides, I think you're going to see, I think it'll change.
Okay, great. So, you know, now we've been hearing a lot, I should say, in the press and all the economic reports and the latest CPI numbers and things like that, that the supply chain is causing a lot of issues. Now, there's also, of course, the issue that could impact commercial real estate, and that is that the supply chain issues are impacting manufacturers, distributors, companies of all different types. How do you think that lenders should prepare for some of these significant problems they might be dealing with these companies that are impacted by the supply chain? What would you recommend?
You know, listen, it's a real issue for everyone. Inventory shortages are impacting all industries, and it's not just new product, right? You know, getting parts to repair things, replace things, take longer lead times. The used car market's a great example. You're seeing, you know, prices through the roof on that. You know, there's just too much demand for available supply right now, supply demand, and prices have gone up because of it. I think in the short term, I don't think they're going to have difficulty with it in the short term, because I think most places are selling through right now. You know, if the floodgates open and you're seeing a ton of inventory go through, and some of it might be, you know, something consumers don't want, they overbought, say seasonality issues or what have you, then I think you're going to start seeing some concerns. But right now, I feel like because of the pandemic, I think companies were more conservative in the way they approach things. And so, you know, I don't know that you can say that this would have happened but for the pandemic, but I think because the pandemic preceded this, I think companies are more conservative about what they're doing with inventory, and it might be less of an issue.
Okay, that's an interesting outlook. I appreciate that.
Yeah, I just think they're being more conservative about it. I mean, it's, you know, long time since we've seen sustained inflation. But again, because of the pandemic, I think companies were more conservative about what they were doing, and it might have less of a long-term impact because of that.
Okay, that makes sense, and I appreciate that. Thanks for the clarification. So now, basically, the way I'm going to wrap this up with you is just your overall view. What do you think is going to be happening in commercial real estate? We talked about office space. We talked about, you know, brick and mortar retail, and we talked a little bit in general as to what's going on out there. Do you see the commercial real estate market continuing to be active lending in it? Do you see any type of a slowdown coming up, anything like that in the near, let's say, 18 to 24 months?
I think that it's like anything, it's going to be sectors and geography, right? It's going to shift a little bit. I think office is going to be slow for the next, 12 to 24 months, but longer term, I wouldn't be as bearish on it. I think you're going to see some geographic areas that are going to struggle, and you're going to see others that are going to boom. I mean, there's a move to certain states, lower income tax states and what have you, and you're seeing, real estate there boom. And then there are other areas that I think are struggling. Overall, though, I think you're going to see a number of transactions and growth and new ideas. And the best part of real estate is, it's forward-looking and creative. So I think you're going to see people kind of adjust and be responsive to what they think the world's going to look like years from now. We talked about office space back. I mean, look at the transformation of office spaces from 10 years ago to pre-pandemic, where it was kind of like more open space working together. People tried to adjust to the way people might work and work together. And real estate's forward looking like that. So I think you're going to see in the coming years, there's going to be some difficulties in certain areas. And we talked about the office sector. Retail is going to continue to struggle in certain areas. I do think at some point it's going to stabilize when you flush out the strip centers and the B and C centers that maybe can't sustain the limited demand for all the brick and mortar retail, since so much has gone to e-commerce. But again, it's not going to be sector specific or geographic specific. I think certain sectors will flourish with certain geographies and vice versa. And I think overall you're just going to see, like you've seen for the last many decades, creative change and things evolve. And there's going to be some great opportunities as a result of it.
Okay, well, great. Thank you, Michael. That wraps up my questions for today, but I always ask the question at the end. Is there anything I left out that you think I should have addressed, or did we cover it pretty well for today?
I think in that last one, I think I covered my overall view on the world of commercial real estate, I guess, in the short and semi-long term. There are going to be some opportunities. I think that that's what makes the industry exciting, right? Like there's going to be there are going to be shifts, and those that can get ahead of it and understand it can take advantage of it, and those that can't and won't, it'll be less fortunate for them.
Okay, well, fair enough. Thanks very much for being here, Michael. I appreciate your time, and I hope that you have a great year-end wrap-up and a strong 2022. And thanks again for being here.
Hey, thank you, Michael.